What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. Things weren't looking great today in the market. It says the Dow closes 500 points lower as weak jobs data and new tariffs incite sell-off. So let's get into the news. It says stocks tumbled on Friday to kick off August trading as investors weigh stark signs of a weakening economy and President Donald Trump's modified tariff rates. So the Dow Jones Industrial Average dropped 1.2% and notching its worst decline since June 13. The S&P 500 shed 1.6% and posts its worst day since May 21, while the Nasdaq dipped 2.24% and for its biggest slide since April 21. Those are big losses. Big losses. So it says here the July jobs report showed non-farm payrolls expanded by 73,000 last month, well beneath the consensus estimate from economists polled by Dow Jones that called for 100,000 increase to payrolls. Prior months were significantly revised down. June's job growth totaled just about 14,000, down from 147,000. The May count came down 19,000 from 125,000, signaling the labor market has been weakening for a while now. So bank stocks were sharply lower on fears that a slowing economy could hit loan growth. Shares of JP Morgan pulled back more than 2%, while the Bank of America and Wells Fargo fell more than 3% each. GE Aerospace and Caterpillar dipped nearly 1 and 2% respectively. What we're seeing is concern about growth that comes at a time when market multiples have been quite elevated, said Thierry Wisman, global FX and rate strategist at Macquarie Group, Macquarie Group. I butchered that, my bad. It's also indicative of a late summer growth scare, but you can layer that a little bit with the idea that the doves on the FOMC ended up being correct, which lends to the idea that the Fed is late. So are they saying the Fed should have lowered interest rates? So the numbers increase the odds that the Fed could act sooner than expected to cut rates and prop up the economy, a notion that helps stem stock losses. Traders placed the likelihood of a September rate cut roughly 86% after the job figures, according to CME FedWatch futures trading. That's a reversal from Wednesday when the odds plummeted after Fed Chair Jerome Powell signaled the central bank needs to wait and elevate the impact of tariffs on inflation before cutting. Oh boy. So Trump's overnight rollout of updated duties that range from 10 to 41% also weighed on sentiment. Goods that have been transshipped in a bid to avoid the tariffs will face another 40% levy, according to the White House. Wow. Canada, one of the U.S. biggest trading partners, will also face a 35% levy. That's up from 25%. This is not sounding good. Anyways, so traders are locking in gains as tech earnings fade, macro risk grow, and seasonality turns negative. Breadth is narrowing, valuations are stretched, and defense positioning is quite building, said Joseph Cusick, portfolio specialist at Calamos Investments. So a sell-off in tech giants also weighed on stocks Friday. Shares of Amazon tumbled more than 8%. After the e-commerce giant provided light operating income guidance for the current quarter. Apple stock slipped 2.5%. So the major averages also suffered a losing week, with the S&P 500 dropping 2.4% for its worst weekly performance since May 23rd. And the Dow's tumbling 2.9% to post its worst week since April 14. The Nasdaq lost 2.2% in the period. Oh, wow. These are not good, posts for the week. We lost a lot today in one day, especially the Nasdaq took a big hit. So that's it for the news. So let's look at some stocks, shall we? Nvidia lost $4.15 today, closing out at $173.72. Amazon, lost $19.36 today, closing out at $214.75. Apple lost $5.19, closing out at $202.38. Meta lost $23.43 today, closing out at $750.01. Microsoft lost $9.39 today, closing out at $524.11. Broadcom lost $5.06 today, closing out at $288.64. IVR gained 3 cents today, closing out at $7.58. SPLG, my S&P 500 ETF, lost $1.19. That's a big loss, closing out at $73.15. Tesla lost $5.64 today, closing out at $302.63. Palantir lost $4.08 today, closing out at $154.27. And my information technology ETF, FTEC, took a big hit today, losing $5.08, closing out at $200.66. Big losses today. But that's the market. Today just was not a good day. And it's not because the companies of these stocks are doing bad. It's because of the weak jobs report and the president's modified tariff rates going up. So that means the price of goods and services are more than likely are going to go up. And will the Feds, lower interest rates sooner rather than later? Will it happen in September? Yeah, so that's it for the news. That's it. I'm tired. But, continue to invest, people. I mean, even when the market is down, it was down earlier this year. It was down at different points last year, the year before that. Continue to budget and dollar cost average into the stock market smartly. And all will be well. I mean, this isn't the first or last dip in the market. This isn't the only bad day. Just today wasn't a good day. Yeah. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, as always, get out of debt. Get out of your personal loan debt. Get out of credit card debt. Get out of student loan debt. Get out of car loan debt. Get out of all debt so that you can invest into yourself and your future, into your retirement. But before you can do that, you need to create a budget so you can start telling your money where to go, right? So you can get out of that debt. Once you get out of debt, also while you're getting out of debt, pause on your retirement investment so you can throw all of your money towards your debt. And once you pay off your debt, start investing 15% of your income back into retirement. Fully fund your emergency fund of 3 to 6 months of living expenses. Fund your kids' college fund if you have kids. And then start tackling your mortgage if you have a mortgage. Like, the mortgage is the last thing you need to tackle. Now that you have all this free cash, since you're out of debt, you can throw more money towards your mortgage and pay that off. If you don't have a mortgage, save up at least 20%, put 20% down on that home, and finance for 15 years. Save yourself a lot of interest payments. And you may pay that home off in 5, 7, or 10 years before 15, right? But again, you have to do that. You have to create a budget. You have to create a plan. You have to tell your money where to go. You have to treat your money like it's your child, like it's your pet. You have to tell it what to do, right? So yeah, so invest your money so you can have your money work for you, and not you just continue to work yourself to the bone and not have anything to show when you retire. So yeah, so I'm going to end this video. Again, like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. Until then, have a great weekend.